Okay, so a former Tesla employee just revealed something very important about the giant EV maker. If you want to know what this former employee just revealed, stay tuned. Well, growth stocks are one of the crucial topics in the financial industry right now, with predictions and speculations flying around about certain brands. Tesla, of course, has had its fair share, and today we'll be focusing on its current market capitalization and its growth rate history, as well as speculations on the brand made by a former employee who has had an inside perspective of how the company manages to function at a very fast pace. According to this former employee, Tesla stock will reach $1 million. There are also people who believe that Tesla will crash and burn. But what will really happen? Keep watching to find out. In a recent interview, the former employee spoke about his time at Tesla and his growth predictions for the EV maker based on inside information. He also revealed how Tesla has managed to keep pushing the growth rate, speculating that the brand may grow by 1,000 times. Now, Tesla offers a unique set of energy solutions, including Powerwall, PowerPack, and Solar Roof. These enable homeowners as well as businesses to manage their renewable energy generation, storage, and consumption with their Gigafactory, which is a facility designed to drastically lower battery cell costs. Experts believe this brand is the future, and not necessarily because of their cars, but also because the company builds batteries at the levels required to reach production targets while also creating thousands of jobs by bringing cell production in-house. And this is only the start. With the release of its cheapest car, Tesla continues to make its products more accessible and affordable to a wider range of consumers, thus driving the adoption of clean transportation and clean energy. So electric car batteries and renewable energy generation and storage all exist on their own, but when they're combined, they are even more powerful, and that's the future we want. How have they been able to achieve their success so far, and how will they continue to do so? It's all about their adaptation of the Agile methodology, which is a style of project management that divides a project into phases. It necessitates ongoing engagement with stakeholders as well as continual development. At each stage, the teams cycle through a process of planning, executing, and assessing. Once the job begins, in essence, the teams go back and forth over the various steps of production as opposed to following the steps in a linear fashion. The shortest responsible iteration cycle is Agile. You iterate once and then you rethink your strategy. So in a nutshell, you do your best this week and then rethink your strategy for next week. Well, the automaker beat expectations during the final stretch of 2021 with double-digit revenue and gross margin growth. Tesla sales will comfortably grow above 50% in 2022 compared with last year despite supply chain problems, CEO Elon Musk said, thanks to their new factory starting up and current plants boosting output. Still, Tesla was fairly reserved about the year ahead, with some market watchers disappointed that the company failed to articulate plans for a lower-priced model. Without concrete forward-looking plans, some analysts find themselves in the cautious camp and see headwinds forming to slow Tesla's momentum. Colin Langan, a Wells Fargo auto analyst, says that he's a bit shy of their forecast of 50% growth. He thinks it's going to be tough by the second half of the year. With the news dominated by the Russia-Ukraine conflict, Tesla appears to be well positioned to benefit if high fuel prices drive a faster shift to electric vehicles. As a pure-play EV maker, it has an advantage over traditional car makers, where weak demand for internal combustion engines could reduce the revenues that they have available to invest in EV production. And what is the outlook for the Tesla share price for the rest of the year? Well, let's find out. Keep watching so that you don't miss out on important information. Tesla has been able to pass on higher raw material costs to consumers, raising its vehicle prices but still increasing sales and gaining market share. Chinese EV manufacturer BYD and Tesla led sales growth in February, expanding their market shares to 27.2% and 17.6% respectively, up by 5% and 3.3% from January. Tesla, which specializes in the high-end market and was the first to achieve profitability in its EV business, is expected to achieve a global market share of 18%. The analysts at Jefferies expect the market to consolidate as a consequence of several countries reducing their subsidies for EVs, with weak brands likely to be wiped out. Now, increased volatility in financial markets with a sharp sell-off in technology stocks, along with ongoing problems in automotive supply chains, have weighed on the share price. The stock ended 2021 at $1,056.78, And while it moved up to $1,199.78 on January the 3rd, it has since continued to shed value. Tesla stock fell to the $760 level on February 23rd and again on March 14th, although the price has ticked higher in the past week. Analysts at Morgan Stanley reiterated their buy rating on March 18th, with a Tesla stock forecast for 2022 of $1,300. And U.S. investment bank Piper Sandler raised its price target from $1,300 to $1,350, with an overweight rating on February the 14th. At the other end of the scale, analysts at Sanford Bernstein raised their price target from $300 to $450 on February the 28th, but with an underperform rating. Wall Street is getting more bullish about Tesla stock, but greater optimism among analysts hasn't been enough to lift the price, given fear of higher interest rates. Higher rates hurt highly valued growth stocks more than others because those companies are expected to generate most of their earnings and cash flow far in the future. You see, the higher the rates go, the less that cash is worth when it's discounted back into current terms, and the less investors may be willing to pay for those stocks. Analysts at Goldman Sachs believe that Tesla, given its leadership position in EVs, will be well positioned to capitalize on the long-term shift to EVs. They expect Tesla's financials to benefit from the ramp-up of the Model Y, as well as new factories in Berlin, Germany, and Austin, Texas, and in the long term, the increase in its mix of software revenue. Goldman Sachs maintained its 12-month Tesla stock price prediction of $1,200. While Tesla's ability to export out of cost-efficient China and history of better managing chip shortages in 2021 could strengthen its competitive position under the current Russia-Ukraine situation. At the same time, higher oil prices and potential scenarios of fuel shortages, especially in Europe, could accelerate the shift to EVs. While the start of production at the Berlin plant could be delayed, recent media reports of Tesla increasing capacity at its Shanghai facility gives it more flexibility to meet European demand. And the trends in the industry appear favorable. EV shares of new car sales in China hit 20% late in 2021, while the figure in Europe is running above 10%. EV penetration in the U.S. is only at about 3% of new car sales, but there are more EV models reaching the U.S. market this year, including pickup trucks such as the Ford Motor F-150 Lightning, the Rivian Automotive R1T, and of course the Tesla Cybertruck. So the change in a company's future earnings potential, as reflected in earnings estimate revisions and the near-term price movement of its stock, are proven to be strongly correlated. That's partly because of the influence of institutional investors that use earnings and earnings estimates for calculating the fair value of a company's shares. An increase or decrease in earnings estimates in their valuation models simply results in higher or lower fair value for a stock, and institutional investors typically buy or sell it. Their bulk investment actions then lead to price movement for the stock. For Tesla, rising earnings estimates and a consequent rating upgrade fundamentally mean an improvement in the company's underlying business. And investors' appreciation of this improving business trend should push the stock higher. Nonetheless, Tesla will certainly reach greater heights in 2022. Let us know what you think about this via the comments section. Remember to like, share, and subscribe. Stay safe, and we'll see you next time.